let's talk about taxes. And let's split the conversation in two parts: sales tax and everything around commissions and how to pay out the money to your sellers. So sales tax. In sales tax, it is important to understand what is the variables involved in that process. Is the product, every category has different taxation. Two is where your warehouse are located. And three, where your destination address. Depends on those three variables, every single country has different rules. Let me provide you a few examples. United States and Brazil has normally a very complex matrix and all these three variables and calculate different taxes. In US, it's something that you add after your sale. So your product is $1, it will be added at the end in the checkout, the corresponding taxes. In Brazil, it's similar, but the only difference is you need to present the product to the end consumer, including the taxes. So it's something that will be presented in the checkout, splitting the taxes, but when you present the product physically or in your website, you need to add the taxes on those. In other countries, it's a more straightforward. Maybe Mexico and Colombia has another behaviors to mention. There are some generic rule that this category applies certain amount. This other category has another one. And maybe it's a country that is excluded of those taxes. It's like a zero taxes applied to them, or half percentage only applied. Only half of the tax is applied, just per big regions or specific situations. I think the second point is how is the flow. So the flow normally works, and you select the product that need to be added or not the tax, legally speaking. So it's something that you need to take care to be accomplished to the law. Two is when you add the product to your cart, just assuming there is an e-commerce. Maybe it's a POS because you're in a physical store, or depends on the different situations on sales. You need to be sure that those taxes are appropriately calculated, including the tax of the shipping that could be applied or not, depends once again of the law, and depends how you apply those shipping options. And then the final price. Great. Then you have that. And after that, normally what happens, depends on the country, is a pre-printed report can be, I don't know, a checkout form, an invoice, or physical electronic invoice. It's something that you need to integrate with the country, with certain institutions that you add to the process. So you be sure that you're reporting properly to the government that sale and who is paying that sales tax. Then you need to integrate those transactions to your ERP. You are also collecting some money with the payment institutions, and some of them require that you split what is the amount of the products, what is the sales tax, shipping, and so on. So it is normally like a 3 or 4 parties, depends on the case. Your platform, whatever you're using to sell, the platform to integrate to your ERP, to the payment process, and to the electronic invoice if the case apply. That's, I think, a good summary, everything that happens in the sales tax. Let's talk right now in the other process, which is commissions. Commissions require that first system is you have your commission engine, you run your report, and you know what is the bonus that every single consultant needs to receive. Great. You share those reports to the consultants, and then what happens is, depends on the type of the legal or person, maybe it's a natural person or it's a legal institution, there are different ways, documentation and everything that needs to support the transaction. And depends on the country, there are different taxation tables that apply to different, I don't know, depends on the level of sales or income that company or person receives. So depends on those two variables, type of person and the taxation table, then they need to send you certain document. Maybe nothing, like in US, is a good example. It's very lightweight in that sense. But if you go, I don't know, to Colombia, to Mexico, that's another couple examples. Maybe the same happens in Peru or in Ecuador, just other examples that came to my mind. That person or an institution need to send you an invoice to you. They're collecting a service to you because you don't want to have anything around labor or something. In that sense, they invoice you. So maybe some sales tax are added to that transaction. And when you want to pay out, you need, depends on your size of your corporation, to collect that sales tax or to pay the sales tax. There's two different behaviors. And another point, you need to have some deductions in order to send that money to the government. So that's add up, I think, extra complexity in documentation, reporting, calculate how to calculate all this process. It's not a big deal, but it's something to take care of. And then I think in terms of technology, you need to be very integrated to the payment gateways because the people are very sensitive, depends on the country, how to collect the money. If you go to US, send the money directly to their banks. If you go to Mexico, until some countries in Latin America, the people prefer to have or e-wallets, local e-wallets, important to mention, not global e-wallets, because it is different to have the money in US or in the local currency. Everybody prefers the US dollars, but it's not necessarily, legally speaking, the best way to do it. Then you need to have other integrations to collect the taxes and do the other processes. And definitely the most sensitive one is how to flow the report, receive the invoice, pay out, and be sure that you are sending the correspondent report, how I pay you, and where you can collect the money. Okay, so I think that's generally speaking, and for sure you need to integrate with your local ERP and your finance system to be sure that all the accounts are, I think, calculated correctly.